Okay, hi all, welcome back. So I want to continue on in this one with the next part of the 2004 cash budget, and that's the payments section. So payments section, I'll just put a heading here of payments. So this is all the money going out during the months, each of the months, July, August to December. So the first thing that we start with in the payments usually is the payments for purchases. And just like sales, there could be cash purchases and there could be credit purchases. So just to see what it's going to look like and where we're going to get the information, we see in the question again, we've got purchases information for each of these months. Okay, in total, and then it gives you more information down here about how that breaks down between cash and credit purchases. So it says the purchases will be paid for 50% in the month after purchase, when 2% cash discount will be received. The remaining purchases will be paid for in the second month after purchase. So in this case, there's no cash purchases, no immediate cash purchases. There's 1 month purchases and 2 months purchases, but a discount is given if this business or the Slaney Limited pays for their purchases within a month. So just to give it a heading then, since there's no cash, it'll be purchases 1 month. Two months, and if you like, you can call it credit purchases. Okay, so next thing is to see what it is again. So purchases will be paid for 50% in the month after purchase, when a 2% cash discount will be received. So that means in July there was 300,000 of purchases done. So let's just get the calculator out here. And the light is pretty bad for this. 300,000. So 300,000, and 50% of that is paid for in the month after purchase. So we can divide it by 2 to get 50% of it, is 150,000. But then if you pay that 150,000 1 month after the purchases were done, you get a discount of 2%. So you don't pay the full 150,000. And just like when we were doing the sales, instead of getting 2% and subtracting it, I prefer to work out what 98% of that figure is, because 98% is the same as 100% minus 2%. So to get 98% as well, I just multiply by 0.98, and 147,000 is the amount for the purchases for the month that we would pay for our purchases 1 month after doing those purchases. So those purchases were purchased in July, so 1 month after that is August. So our credit purchases 1 month will be August, 147,000. However, the other 50%, the other 150,000, which is half of 300,000, that's going to be paid in the second month after purchase. So that's going to be paid in 2 months after July, which is not August but September. So the 150,000 will be paid in September. So both of these together, 150 and 147, makes up 297,000, which comes from this 300,000 minus the 2% discount that you got for paying this 150,000 1 month after the purchase. Okay, so that's where all that is coming from. So if we do a second one, we take the 336,000 from August, 336, and we divide it by 2. And if you like, at that stage, we could put this, that's the 50% that you're going to pay 2 months after, so 168,000. I'm going to do this first, 168,000. And then I'm going to get the amount that you would pay 1 month after, less the 2% discount, while I have it on my calculator here, by multiplying by 0.98, which gives me 164,640. Okay, that's August's purchases. Go on to September's purchases, 352,000. Divided by 2 gives me 176. Again, I'm going to do the 2-month money first. Then I'm going to get 98% of that. To get the 1 month payment, 172,480. Then I'm going to do, where was I? It was September, October's purchases, which is 360,000. Divided by 2 is 180,000. I'm going to put that in December, because if that's October, then 2 months is November, December. And get 98% of that. Gives me 176,400. Then I'm going to get November's purchases. So it's 376,000. Divided by 2 is 188,000. Now that's the 2-month money, but the 2 months after November is January, so there's nothing to put in there. So all we need is the 1 month money, which is 98% when you take off the 2% discount. 184,240. Okay, and that's all your purchases done. Again, we can just leave a line here for those months. Now, of course, in terms of payments, purchasing your goods is not the only payments that this business has. It has things like wages and all sorts of other overheads. So let's go and look at some of them now. Really, the sales and the purchases calculations are probably the toughest part of the question. So if we look at the rest of the costs here, wages 45,000 per month payable as incurred. So you pay them straight away. You don't wait a month or anything like that. Paid straight away. So again, that can just be wages 45,000, 45,000, 45,000, 45,000, and 45,000. Okay, the next is variable overheads, 10 euros per unit payable as incurred. Now they don't say per unit what. What they mean is per unit sold in this case. Ordinarily, if you had more information, it might mean per unit manufactured. But in this case, since we don't have manufacturing information, it's per unit sold. So what we do is we look at, in July, you had sales of 525,000 and it says that selling price is 70 euros per unit. So if we want to know how many units you sold, we would divide 525,000 by 70 euros. So let's try that. 525,000 divided by 70. That means 7,500 units were sold in July. So if we want the variable overheads, or the cost of the variable overheads for July, then it's 10 euros per unit sold. So if 7,500 units were sold and 10 euros per unit is the variable overhead charge, we'll multiply that by 10. And 75,000 is your variable overhead cost for July. So variable overhead 75,000. And then we do the exact same thing for each of August, September, October. I'll just do August. So August, 588,000. So 588,000, again to the calculator, 588 divided by 70 euros per unit gives me 8,400, and then multiplied by 10 gives me 84,000. That's the variable costs for August. Now I'm just going to pause and fill in the rest of those. Okay, so I've just calculated the rest of them there in the same way. So our next cost then is fixed overheads, including depreciation, is 52,000 per month payable as incurred. So if we didn't have this including depreciation, we'd just put 52,000 in each of the columns because it's paid as incurred. However, it's including depreciation, and we don't want it to include depreciation because depreciation is what's known as a non-cash expense, and this is a cash budget, so we only want cash expenses to be included in it. So what we must do is, from this 52,000 per month, we must subtract whatever the depreciation each month is to work out what the rest of the fixed overheads are, not including depreciation, and then that's what we put in. So I just put in the title first, fixed overheads, and then perhaps just down here we might do the calculations for the depreciation per month, and here's where we get the information for the depreciation per month. Down at the very bottom it says equipment will be purchased in July costing 48,000, which will have a useful life of 5 years. So it will last for 5 years, and we assume, even though it doesn't say it here, we'll assume that it has a zero scrap value, that it's worth nothing or zero after 5 years. So that means if it cost 48,000 and it's going to last 5 years, then it's going to go down in value each year by 5, isn't it? 9,600, if my calculations are correct. So it's going to go down by 9,600 each year for 5 years until it's worth zero. So 48,000 minus 9,600 the first year, minus 9,600 the second year, etc., until after 5 years it's gone down to zero. Okay, so that's the depreciation for a year, but because our budget is monthly, we have to do a further calculation and figure out how much it's going down in value by each month. So we divide that again by 12, and 12 eighths are 96, isn't it? So 800 euros is the monthly depreciation. So we had fixed overheads of 52,000 including depreciation. So what we do now is we see what the fixed overheads would be if we exclude the depreciation. So we subtract, and I'm using brackets to indicate subtraction, we subtract 800 from that figure, and it means we've 51,200 per month in fixed overheads excluding depreciation. And we just put that figure in up here each month. 51,200. Okay, so the next thing then after that is, that's fixed overheads. What else have we down here? Equipment will be purchased in July costing 48,000. Well, we assume then you're going to pay 48,000 for equipment. So it's going to be equipment. It said it was going to be purchased in July, so July 48,000. Simple as that. To finance this purchase, a loan of 50,000 will be secured. So you're going to get a loan of 50,000 in. I'll show you where to put that in the next video. There are two options for where you can put it, but I'll explain that in the next video. It will be secured at a rate of 10% per annum. Interest to be paid monthly, but capital loan repayments will not commence until January 2005. So it means if we're not paying back any of the capital repayments, it means we won't have any capital loan repayment line up here, which we could possibly have in other questions, but we will have an interest payment every month. Okay, so let's figure out what we're going to have. It's a 50,000 euro loan, so maybe we'll do this in the calculator to make it easier. The loan is 50,000. The rate per annum is 10%. That's 10% per year per annum. So to get 10% of that, multiply by 0.1. So it's 5,000 euros you're paying in interest every year. But again, our budget is monthly, so we want to divide that by 12 to see how much you pay each month. And oops, because this is an older question, some rounding is required. I think in the more recent questions the figures work out nicely. So in this case, if we were to round that to the nearest euro using mathematical rounding, we round up to 417 euros per month. So just to put that in there, 417, 417. Okay, and that's the end of this part of the video. The next thing we need to do is just to tot up all of the payments. So just tot up this, add these together, add these together, add these together, add these together, add these together. So I'll have those added up and you can check them in the next video.